Hello, welcome to today's episode of Tutorials with Ike. My name is Prince Owusu, a level 200 business admin student from UPSA, and I'm here to solve the evening students question 2, which is about the bank reconciliation statements. So the question says that the cash book balance of Benedict and Company disclosed a debit balance of 8,550 Ghana cedis, which did not agree with the closing favorable bank statement balance of 4,500 Ghana cedis. The following were discovered during the reconciliation. I. Checks received from customers settling their debts amounting to 27,750 were still in the drawers of the cashier. Second, or the II, an amount of 1,200 standing order for the payment of electricity charges was paid by the bank. This has not been recorded in the books of Benedict and Company. 3. The bank charged 450 Ghana cedis for services rendered to Benedict and Co. This was recorded in the cash book. This was not recorded in the cash book. Fourth one, which is the IV. The bank had debited Benedict and Co. in error of 1,500. V. A check issued to a supplier of 4,200 Ghana cedis was rejected by the bank because of insufficient fund. 6, or the VI, a credit transfer of 7,500 Ghana cedis had been made in favor of Benedict and Co. This has not been adjusted in the cash book. VII, dividend received of 1,500 was debited to the cash book as 5,100. VIII, as at 31st December 2019, checks totaling 18,750, which was recorded by Benedict and Co. as paid to suppliers, had not been presented to the bank for payment. You are required to prepare A. Adjusted cash book, B. Bank reconciliation statement as at 30th April 2025. So this is the question that we are coming to solve, and it's the evening students question that they wrote. So when you talk about bank reconciliation statements or adjusted cash book, all that we are trying to say is, you as a person or as a business entity, you deal with bank, you have opened bank accounts, and the business that you do, there are some people who pay you through bank, and there are some people too, you pay them through bank. So the bank can perform certain things that they won't tell you, which you may not know. So example, you may think that you have 100 cedis, this is your cash book, and you may think that you have 100 cedis. You have 100 cedis in your cash book. So you are expecting this 100 cedis to be in your bank account. So you deposited 100 cedis to the bank. So you are expecting that this 100 cedis is supposed to be in your bank account. Now, fast forward, you go to your bank and then you try to withdraw this 100 cedis, and the bank will tell you that you don't have sufficient balance, or your balance is insufficient. Why? Because the bank do render some services to you that you are not aware of, that they have debited you a certain amount of money to cater for that service that they are rendering for you. So any service that the bank will render for you, that the bank will charge you for it. That's why when you come to the bank, we have something we call bank charges. And when you come to bank charges, it's we, the firm or the company or the individual, we pay the bank charges. And now, as a company, you may not get time to go to the bank every month to pay your employees or your suppliers. So you can give the bank instruction that, after every month, or maybe on the 20th of every month, pay these people an amount of maybe 1,000 cedis. So you have given the bank instruction to make payments on your behalf. So when it comes to this place, it means you are giving the bank standing order. Standing order. Sometimes in the question you won't see standing order. as clear. But when you see instruction, it means what? Standing order. So with this one, when the bank pay these employees in your name, you become what? The payer, and the bank will deduct your amount. So the bank won't call you to tell you that, Mr. Usu, your account has been debited because you said we should pay these people, so we have paid. No, the bank won't do that. So maybe every month you used to try and check the balance that you have with you, and then the balance that you have at the bank, to see whether it tally or it's equal. I hope you are getting me. Whether it's equal. So if you go and take your bank statements, that's where you are going to know that the bank has charged you for what? A certain services. And also you have received a certain what? Money, which is credit transfer. So when you talk about the credit transfer, we are talking about a money that a supplier has paid you. So when the supplier pays you, the bank will what? Credit your account. And when the bank credits your account, it means you are going to receive the money. So you may not know that your debtor or your customer has paid you a certain amount of money unless you go to the bank and take the bank statement before you get to know. So when you get to know this, that your customer has paid you, then you come and what? Adjust your cash book. Sometimes you may also issue check to your suppliers, and you are expecting that, oh, maybe I issued the check in the month of what? January. So in the month of January, you are expecting the suppliers to go and what? And cash the money out. But the suppliers may not be able to what? Go to the bank during the what? The month of January, but they may go on what? February. Meanwhile, the bank statement that you are preparing is in the what? Is in the month of January. So this will become what? Unpresented checks. Though you have issued the check that you have paid, but it has not been what? Presented for payment. Sometimes to your debtors or your customers may pay you through bank, and when they pay, they will give the check to the bank to credit your account. And the bank maybe the time that it was given, let me use this January for example, the time that was given, the bank may not what? Credit it during the January, but it may what? Credit the account during what? February. So it means when you are preparing the bank statement, bank reconciliation statement, and then the adjusted cash book, the one that was credited in February cannot come in the month of what? January that you are preparing the what? The bank reconciliation statement. So that will become what? Uncredited checks. And the bank too, they are human beings like us. Sometimes they make errors, they make mistakes. So they can debit your account. Maybe they are debiting someone's account, and because of name similarities or because of unforeseen circumstances, they may end up what? Debiting your account. So that one we call it what? Wrong debit. So with the wrong debit, is the bank that committed this error. So it's the bank that is going to what? Correct this error, and that one will go straight to what? Go straight to the bank reconciliation statement. And we have something we called wrong credit. So the wrong credit to the bank may be what? Maybe mistakenly credit your account. Maybe someone has deposited money, and because of name similarities, the bank, instead of the bank crediting the person's account, the bank ended up what? Crediting your account. So this is what? This is wrong credit. They have credited your account wrongly. So this is what? The wrong credit. Now we have something we call dividend. Dividend. Now, in business sense, dividend is different from profit. We get dividend from what? Profits. Every business aim is to what? Make profit. So you making the profit, you may end up making profit of, let's say, 50 cedis during the year or during the month that you are preparing. You are preparing what? Your statement. So the 50 cedis, the business will end up what? Deciding whether to use these 50 cedis for the business, for the running of the business, or use these 50 cedis and share it to what? The shareholders. So when the business decides to what? Use this all 50 cedis to share it to the shareholders, that one will become what? Dividend. So let's say 50 cedis, and the business has decided to split the money into two and use half to run the business and then use half for the what? Shareholders. So it means you get what? 25 cedis as what? Dividend. Instead, the profit was what? 50 cedis. So the 25 cedis is going to be the dividend that will be shared to what? The shareholders. So the shareholders will receive what? An amount of 50 cedis. 25 cedis. So let me say example. Let's say I have invested in UPSA, and they've told me that every year I will receive what? A dividend. So UPS have told me that any profit that they will make, they will tell me what I will receive, and their profit is based on the number of students that they admit. So after the year, UPSA made a profit of 50 cedis. So the 50 cedis that they made, the profit that they made, they decided that, okay, since we are running a school, we don't have desks, we don't have seats, we don't have marker boards, or we don't have projectors. So these 50 cedis, we are not going to give it to the shareholders, but rather we will divide the money into two, which is 25 cedis and 25 cedis, and use 25 cedis to buy some of the things that we are having it inadequate in the school, and then use the 25 cedis as a dividend or the profit for the shareholders. So when you give it to your shareholders, it will become dividend. And most of the time UPSA will not give a dividend to a shareholder on the tabletop. No, UPSA will give the money to the shareholder through bank. UPSA will pay the money through bank to the shareholder, and you, the shareholder, you may not know, or you, the company, you may not know that UPSA have given you a certain amount of money. So this money will turn out to be a dividend. So this dividend will be given to you, and it will be debited in your bank account. I hope you are getting me. It will be credited. They will credit your bank account, which you have to debit your cash account, because you have received money from UPSA. So this is how dividend is all about. Let's talk about dishonored checks. Now, in a business that we all issue checks, one way or the other, there will be a situation where the bank will dishonor your check, or the bank will decide not to pay your check. Why? We have so many ways of dishonoring a check. Maybe the date is inaccurate, the amount in figures is not the same as the amount in words, maybe the bearer's name is not accurate, or it's not the one that was directed to. So we have so many ways to dishonor a check or insufficient fund. So let's say you, the business entity, you have your cash account to be like this. So you have your cash account here. This is your cash account. And you have issued a check to pay your suppliers. So we always say that in account, you have two principles. You debit the receiver, and you credit the giver. Now, when you pay your suppliers, it means you are paying. So since you are paying, you credit your cash account. So let's assume that you paid your suppliers 100 cedis. So this 100 cedis, you have recorded it here that you have paid your suppliers. Now, the suppliers go to the bank, and then the bank told them that, oh, this person does not have 100 cedis in his account, so we can't give you this money. So it means they have to dishonor it. When they dishonor it, the supplier will come and tell you that the check that you issued to me, it has been dishonored. So if it's dishonored, the reason I recorded this is because I want to show evidence that I have paid my suppliers with 100 cedis. So if it's dishonored, then I have to come and debit my account, which is 100 cedis, to cancel this. Because right now I said I have paid, and the person went to the bank didn't pay, so it means I have not paid at all. So I have to come and debit my cash account to cancel this. In accounting, we don't have anything like this. Then you cancel. No, we don't do that. Instead, if you have made a mistake at the credit side, which is we paid, but it has not been given to the supplier, and the supplier have told us, instead of us to cancel this, we will rather debit this cash account with the same figure. That will cancel each other. So at the end, we will have a balance of 0. Secondly, when your customer pays you, the customer will issue a check to you. So when your customer pays you, it means you will receive. So let's say your customer has given you a check to go to the bank and cash it. So immediately you will debit your cash account, because your customer has paid you, which is the debtor has paid you. So let's say 100 cedis. Your debtor has paid you 100 cedis. Now I have recorded that I have received 100 cedis from my debtor. Now when I go to the bank told me that my customer does not have this 100 cedis in his or her account. So I can't cash the money out. So it means they have dishonored the checks. So dishonoring the check, here I have recorded that they have paid. And since the bank didn't give me the money, I will inform the debtor that the bank didn't give me the money. Then I will come to my cash account and then credit it with 100 cedis with dishonored checks. So with this dishonored checks, it will just cancel this 100 in my cash book for my balance to be 0. So this one will cancel this. So the difference, when you look at the format of the adjusted cash book, You know that we have dishonored checks at the credit side. No. So dishonored checks at the credit side, it will be based on the question that will be given to you. That's where you are going to decide whether it will be at the credit side or at the debit side. So whenever you issue a check to a supplier, it means you are making payment. So you, the business, you issue what? The check to the supplier. You are making a payment. So you record it at the credit side of your cash book. And it is when it gets dishonored, it means you have to come and what? Debit it to cancel it. So whenever you, the business entity or the individual, you issue a check to your supplier and it's dishonored, you debit your cash account with what? Dishonored checks. But when your customer or debtor issue a check to you, the business entity or the individual, and it's dishonored, that one you what? You credit your check, because when they issue the check to you, you receive the money and you record it. And right now you are telling us that the money was not given to you by the bank. So it means you have to what? Come and credit your account so that it will cancel this. That's the dishonest checks. That's the difference. So whenever you issue a check to your supplier, and it's dishonored, that one you will debit your cash account. And whenever your customer or your debtor issue a check to you and it's dishonored, that one you will credit what? You will credit dishonored checks in your cash book. And also debit transfer. So with the debit transfer, the bank has debited your account. So when the bank debits your account, it means you are making payments. And you are making payments, your adjusted cash book or your cash book, it will be at the credit side because you are what? You are paying. So that's what? Debit what? Transfer. And in here too, we make errors. We the human beings, we make errors. Sometimes error of undercast, a whole lot, or transposition. So when you make error, that one, the transaction will tell you where the figure will be or where the error will be. So error, we have it at both sides of what? Your cash book. We don't have error as a specific place. So error varies. The transaction will tell you where the error will be. So these are some of the examples or the format that I will explain to you. So now let's go to the question and let's solve the question itself. Now, the question is saying that the cash book balance of Benedict and Company disclose the debit balance. So, the cash book balance of what? Benedict and Company. So, whom are we talking about here? Which business are we talking about? We are talking about what? Benedict and Co. So, we have what? Benedict and Co. So, first thing that you have to do is to write what? Benedict and Company. And then you underline. Why are we writing this? We are writing this because whenever the accountant or the examiner takes our book and sees Benedict and Co., the accountant or the examiner will know that, okay, so anything that you are coming to do here is about what? Benedict and Company. Anything that you are coming to solve here, the adjusted cash book and what? The bank reconciliation statement is for what? It's for Benedict and Company. So the first question is saying that we have to solve for the what? Adjusted cash book. So we have adjusted cash book. Then you open your T account. You open your T account. Then you check the currency sign. Most of the time, you won't get the currency sign to be Ghana cedis. So always try and check the currency sign. So here, the currency sign is what? Ghana cedis. So we have our Ghana cedis sign here. And then we have our Ghana cedis sign also here. Now, let's read the question again. The cash book balance of Benedict and Co. disclosed a debit balance of what? 8,550. So a debit balance of what? 8,550. So it means this amount of money is going to be at the debit side of our cash book. At the debit side of our cash book. So we have balance. So here we have either brought forward or brought down. We have 8,550. So this is the figure that we are having. So 8,550 Ghana cedis, which did not agree with the closing favorable bank statement balance of what? 4,500. So it means the bank statement showed us what? The 4,500 500, which the bank statement this was supposed to be at the same thing, but it didn't tally. So we have to what? We have to make some adjustment to know that this bank statement, we have to correct all the errors to know that this bank statement balance that has been given to us is what? Is correct. So let's go to the first transaction, which is the I. Checks received from customers settling their debts amounting to 27,750 were still in the cashier's drawer. So they paid the money to the cashier, which is they paid the what? They gave the cashier the check to credit our account, but they didn't credit our account during what? That period. So during that period, they didn't credit our account. So it means this first thing has become what? Uncredited checks. It has not been credited yet. So uncredited what? Checks. And that one is the bank responsibility to what? Correct that error. So here, we don't come here. We don't touch it. The bank reconciliation statement will deal with it because it's what? The bank who committed this error. Now, the second one is an amount of 1,200 standing order for the payment of electricity charges was paid by the bank. So an amount of 1,200 was paid by the bank by what? To pay our electricity what? Bills. We told the bank that we can't go to ECG to pay our electricity bills every month. So every month pay this amount of money to the ECG so that they will use it to settle our what? Our electricity bill. So when the bank has been paying continuously, and the bank won't call us to tell us that, oh, this month we paid electricity this amount. No, it won't call us to tell us that unless we go for the statement of what? The bank, before we get to know that, okay, so this month the bank paid this amount of money in favor of us and it's standing order. We have given them instruction. So they are paying. It means like they are paying on our behalf. So we are paying. And whenever you are paying, to be at the credit side of what? Of the cash book. So standing order. Standing order. We have what? 1,200. 1,200. Now the next question, which is the III. We have the bank charged 450 for services rendered to Benedict and Co. This was not recorded in the cash book. Now, when Benedict opened the bank account, they took what? Checkbook. They took ATM card. And sometimes they may also what? Try to use mobile banking. So these services that they are rendering to what? Rendering for Benedict and Co. company, they have to pay for it. And the bank won't come and tell you that because you have ATM card, we have deducted you this amount of money. No, the bank will deduct you without your knowledge. So when you go for the bank statement, that's where you are going to know that, okay, so the bank charged me this amount of money for the services that they are rendering for me. The services that they are rendering for you is what? They are keeping your money safe for you, which is they are saving your money. They are giving you ATM card to get access to all your bank accounts at anywhere that you are. And they are giving you check to issue to people. So even if you don't have money on you, you can issue the check as payment. And they are giving you mobile banking, which you can send money through your what? Bank account. So these are the services that they are rendering. And you have to what? Pay for it. So bank charges is always at the what? Credit side of the cash book. So we are paying for it. Bank charges, which is what? 450. So we have the 450. The fourth one is the bank had debited Benedict and Co. in error of 1,500. The bank committed this error. It's not us. It's not Benedict and Co. It's the bank. So this one, we won't touch it. Wrong debit. We won't touch it. It's the bank that will deal with it. So when you go to the bank reconciliation statement, that's where we are going to treat what? This error. The next one, we have a check issued to suppliers of 4,200 was rejected by the bank because of insufficient what? Fund. Now, let me explain this quickly. So we have a check of what? 4,200. And we issue to what? Our suppliers. So it means Benedict and Co. is what? Making payments. So in our cash book, the original cash book that we are having, remember, we have our original cash book, but since it didn't tally with the bank reconciliation statement, that's why we are what? Adjusting it. We are correcting all the errors that we have made. So your cash book like this, you have paid what? Your suppliers with amount of what? 4,200. So you paying means it will be at the credit side of your what? Of your cash book. So we paid. We paid our suppliers. They supply us goods and we have paid this amount to them. So we have settled it. Now, we were in the business working and they came to tell us that this amount of money that we paid them, the bank didn't what? Give them the money because they said what? We don't have enough balance in our bank or in our bank account. So they couldn't what? Pay us. So this is the evidence showing that we have paid our suppliers. Right now, the bank has dishonored the check. So we have to cancel what? We have to cancel this figure from our cash book. So the cash book, we have to do what? We have to debit this same amount of money. This same amount of money. So 4,200. So this 4,200, when you balance the account, you get the balance to be what? 0. So it means you have cancelled this account. Remember, I told you, whenever you are issuing a check to a supplier, which is what? Dishonored, you will debit your cash account. And whenever your supplier issue a check to you and it is dishonored, you will credit your what? Cash account. So that one you have to what? You have to pay attention. It's not always at one side. So this one, we issued the check. We made the payment through check to our suppliers. And right now it has been what? Debited. Sorry, it has been dishonored. So the dishonored means we have to credit our account because at first we paid for it. So we have to credit our adjusted cash book so that it can cater for what? The 4,200. So we have what? Dishonored check, which is 4,200. So the 4,200 is there. Now the next one, a credit transfer of 7,500 had been made in favor of Benedict and Co. This has not been adjusted in the cash book. Now, a credit transfer, what is credit transfer? A credit transfer is like someone has paid you money through what? Bank or through check, and the bank has what? Credited your account. So they have credited your account in what? In transfer. You didn't get the money, but they have what? Transferred the money to your account. So credit transfer. So someone paid you and you have received the money. So since you are receiving the money, we didn't know that you have received a certain amount of money. So after the bank statement, we got to know. So right now we have received the money. So we have to what? Put it at the what? At the debit side. Always credit transfer is at the debit side because we will receive the money. So credit what? Transfer. We have our credit transfer, which the figure is 7,500. So we have 7,500. The next one, dividend received of 1,500. So we have 1,500. Dividend received by what? 1,500 was debited to the cash book as 5,100. Now, debited to the cash book, it was correct. Debited. Dividend, we received dividend. So dividend is always at the debit side of what? Of our cash book. Now, the dividend was what? 1,500. Instead, we recorded what? 5,000 what? 100. So error of what? Transposition. We have interchanged the what? The figures. So error of transposition. So we have to correct it. Now, at first, we were supposed to record the 1,500 at the debit side, but we recorded what? 1,500. So this one, you have your cash book like this, and instead of recording this, we recorded this. So we have what? 5,100. And now you have gotten to know that the real amount is what? Is this, which is 1,500. So we have to get this. So what will you do? You have to compare these figures, these two figures, find the difference. So subtract the 1,500 from the 500, 100. Then the difference that you will get. So when the difference that you will get, so you get a difference of 3,600. So the difference, then you will credit the difference. If you credit the difference, at the end, when you balance your cash book, you will get what? The balance of 1,500. So you have your 3,600. Now let's close our balance to know that you get the 1,500. Now, this is the biggest figure. So 5,100. 5,100. Now, here is the biggest. So let's find the difference. The difference is supposed to come here, which is what? The carry down. And we will have our brought down here. So the carry down, the difference will be what? 1,500. And here will be what? 1,500. Remember, this is the 1,000 that was given to us. And right now we have the 1,000 here already. So what this one means is that we have to credit our cash book with what? The 3,600 to settle or correct this error that was made. So this is what we have worked for. So we have what? Is the dividend was supposed to come here, but we have overstated it. So right now we have to what? Deduct that amount from it. In accounting, we don't cancel. So we have to put an amount here that will cater for it to get what? The 1,500. So we have our dividend to be here. So dividend. So it's like this. We have 5,100 minus what? 105. 1,500. So the difference will be what? 3,600. This is our dividend. This is our dividend. So the next question is VIII. As at 31st December 2019, checks totaling what? 8,750, which were recorded by the Benedict and Co. as paid to suppliers had not been presented to the bank for payment. So this is simply means what? Unpresented checks. We have issued a check to what? To some people or our suppliers to what? To pay them. They have not presented the check yet. So it means what? Unpresented checks. So the bank will deal with it. That one, we don't have any issue with that. So unpresented checks will go where? The bank reconciliation statement. So let me clean this one. And looking at the transactions, it means we are what? We are done with all the transactions. So we have to balance what? Our cash book. So let's balance our cash book. We have our balance here. So the balance will give us what? 20,250. 20,250. Now, you getting this 20,250, it means this side gave us the 20,000 what? 250. And this side didn't give us what? The 20,250. So what we are coming to do is we will subtract this side from what? This side for us to get the difference. In accounting, it has to be what? The same. For us to get the difference, which is what? Balance carried down. And your balance carried down is the same as your balance what? Brought down. So when we calculated, we had what? 15,000. So 15,000 will be added to this amount before you get 20,250. So that one will be what? Your balance carried down. And we have your balance brought down. So your carried down is the same as your brought down. Now, this is our adjusted cash book. So we are done with the adjusted cash book. So the next thing that we are going to do is to what? Prepare the bank statement, the bank reconciliation statement, and know that the figure that the bank gave us as our balance, which is the 4,500, is the same as the figure that we are supposed to have after correcting or adjusting our cash book. So let's do the bank reconciliation statement. So we have bank reconciliation statement. Now, the bank reconciliation statement, the question that was given to you, they gave you a specific time that was prepared. So they gave you, you are required to prepare bank reconciliation statement as at 30th April 2025. So, as at 30th April, please write it in full, 2025. So this is it. Now, you have this is your format. You have your Ghana cedis here, and you have one Ghana cedis also what? Here. So this is your format. Now, the first thing that we are coming to deal with is what? To bring a balance as per the adjusted cash book, which is what? This. So our balance as per adjusted cash book is what? 15,000. So the first one that we should do is what? Balance as per adjusted cash book. So that one gave us what? 15,000. That one will come here straightforward. 15,000. So the 15,000, this is the money that we are having in our cash what? In our cash book, or the cash book that we have what? Adjusted. This is the money. Now we will add unpresented checks because the check has not been presented yet. So it means the amount of money that we were having when we were issuing the check is intact. It has not reduced. So we add what? The unpresented checks to it. So we have unpresented check. So unpresented checks. Unpresented checks. In the question, the unpresented check is. So you go through the question, and the last one, as at 31st December 2019, checks totaling what? 18,750, which were recorded by Benedict and Co. as paid to suppliers, had not been what? Presented to the bank for payment. So it's what? 18,750. So we have 18,750. Now, why are we writing it here straightforward? Here in the question, we don't have anything called wrong what? Wrong credit. The bank didn't commit any error, which is what? Crediting our account in an error. So if there was an error, then this figure will what? Come here. If you are having credit, wrong credit, this figure would have what? Come here. Then we will add the wrong credit to it. So after adding together, then we will bring it here. But here we don't have any wrong credit. So straightforward, it will come here. So we will add this figure. And when you add, you are going to get 33,750. So we have what? 33,750. Then you will less your what? Uncredited checks. So uncredited checks. So with this one, uncredited checks, they are the checks that has been what? Paid to the bank in favor of you, but the bank is yet to credit your account. When they credit your account will be what? More. It will go up or it will increase. Right now, it has not been what? Credited yet. So it's not part of your what? It's not part of your money. It's not part of your money. So we have to what? We added it to what? Our cash book. So here, uncredited checks, it means we have to what? Less it from what? The money that we are having. So uncredited checks, we have the figure to be 27,750. So with this 27,750, the reason I'm writing here is that the bank committed an error, which is what? The wrong debit in the question. That's why I'm writing it here. So this one, we will add what? Wrong debit to it, which the figure is what? 1,500. So you see this one. These are the money that we are going to deduct from what? This money. This is the money that we are going to deduct from this money. So when you add this money, when you sum it up, you are going to get what? You are going to get 29,250. And remember, it's what? Less. In accounting, whenever you see less, you put the figure in what? In brackets. So you put it in what? In brackets. Now, you subtract the 29,250 from what? The 33,500 and what? 33,750. Now, when you subtract it, you get what? You get 4,500. So the 4,500 will be our what? Balance as per bank statement. So after getting this, then you go to the question. The question says, you go to the question and check whether the bank statement that was given to us, when we went for the bank statement, the balance that was given to us, you have to check whether this one is the same as the amount of money that the bank gave to us as our balance. So the question says, the cash book balance of Benedict and Company disclosed a debit balance of 8,550, which did not agree with the closing favorable bank statement balance of what? 4,500. And we are having what? 4,500. So 4,500. So it means we have what? We have corrected all the errors and we have adjusted our cash book. And this balance is what? It's true that this is the money that we are having in our bank accounts right now. So as at 30th April 2025, that we went for the bank statement, this is actually the figure that we are having in our account, or this is the balance that we are having in our bank account. So it means what we have done here has what? Balanced. So when you do this, you will get your 10 marks and you are good to go. So it has been what? Balanced. So thank you very much for spending your time to watch these videos. I hope you get better understanding. I'm wishing you good luck for tomorrow's exams. Thank you very much.